Good morning. Good morning. Welcome. Welcome. Welcome back. Happy New Year. Uh, uh, the first time in I think 3 weeks that I am live and that I am trading at all. It feels great to be back after 3 weeks of eating, drinking, and like padding. I think it's time for us to get back and do for me what I love, right? um um I think this year can bring us very positive things, and I'm not a guy pro New Year's resolution, to be honest, right? I'm more like a goal driven guy, so I don't write resolutions for this new year, but I did wrote a lot of goals that I want to achieve, and I need to work towards that, right? And one of the goals, I have few goals, but one of the most important goal is make this Apex thing work. Good morning, Jin Lee. Welcome. I do have a lot of funded accounts, and I do have a lot of Apex funded accounts, right? So I am determined to make that work for me this year, okay? And always keeping in mind that the only thing that is in my power are my actions and not the outcome, okay? So I am the one in power of myself, and you too. But the outcome is completely random, okay? So you can work towards one thing, but the outcome can be different. So this year, we're determined to focus on the actions that we were taking, okay? All right, so let's dive into the markets. I did have a technical issue this morning, so one of my 3 screens is not working, so just have to handle this with 2. So please bear with me. All right, so let's go to the pre-market. There we go. And let's start with the as usual, the economic side of news. Okay, today pretty quiet. We do have a couple of reports coming out, CB employment trends, but it's just a yellow folder. And then we have 3-month bill auctions and 6-month bill auctions. It's a yellow folder, but I think these are having more impact than what we expect. Okay, then we have a 3 in the afternoon, consumer credit. Tonight we do have yen news. This will affect the dollar, right, overnight. Let's see how this goes. It's 6:30 in the afternoon, so we can see it. Not live, but we can check the dollar tonight. Okay. Tomorrow we do have Fed Chair Powell speaking. I think he's out of the country, Stockholm or something, speaking tomorrow. So this will move the market. But other than that, some crude oil reports coming out tomorrow, and a 3-year note auction, right? Wednesday, pretty quiet too. We do have some good morning, welcome. We do have some mortgage number coming out as usual every Wednesday, crude oil numbers. And then Thursday is a big day. CPI, core CPI, and all CPI month over month, year over year. These will move the market. Okay, so Thursday is the big day, and then we have the jobless claim as usual, right? I don't know why this thing they keep putting red folders on the jobless claims. I think it's not relevant right now, but whatever. And then we have 3-year bond auction. This is very important. Is 1 in the afternoon. Then Friday, some Michigan consumer expectations and consumer sentiments as usual. They come out on Friday. All right. Okay, and the CFTC, we could review these next Saturday in the morning. I haven't done any live stream on Saturday, I think since September or October, so we can do that this Saturday. All right, so let's jump right into the dollar. The dollar has been coming out since September. By the end of September, we have a very, very important retracement on the dollar, right? And now the dollar structurally is starting to break to the downside. We have broken this rally-based rally, if you will, on the weekly. This is the daily chart, but I'm just assuming this is something on the weekly, right? Because it has like 2 weeks worth of trading. Here and also here, we broke this pivot. We're breaking this one, and the next one is this. Okay, if we put the drawings on, right, we are in demand, but it's not a high quality demand right now, just because it's been tested twice, and this is the third time, right? We could have a reverse here, but I don't account for this area on the dollar to be the one to reverse prices to the upside, just because it has been tested so many times, right? And in some short period of time, like we came here on mid-December, by the end of December, now we're back here, right? 10 days later. Next stop for me is this one, a demand zone created in May of last year. But we are going to focus on supplies on the dollar, okay? So that tells me, right? And if you see the title of this video, first 5 days of January says bullish, is because 83% of the time, since 1950, if we have the first 5 days positive on the market, the entire year ends up positive, right? That's a statistic. That doesn't mean that will happen this year, but it's good to have that information on hand, so you can be aware of what could happen. Okay. So these are the areas on the dollar. If we go to the lower time frame, very bearish, right? And I want to see where the 3 a.m. Open is right here. So I could expect a retracement to this area, right? And if the dollar happens to come back to this area, I would like to think long on the equity markets, right? Oh, I know you guys watching. Yes. All right. This is one scenario long for me on the equity markets. One scenario short on the equity markets. On the opposite is something like this. We come here, we finally hold this area, and then we break to the upside. Okay, so that's my short bias on the equity markets. Now, based on what the market is doing, I would say more like we are inclined to have a sideways market, and I'll tell you why. We have been ranging since September, especially on the Nasdaq. I'll show you later. And we don't have a really a good catalyst today, any like news event or something that can give us the direction for the rest of the day. So this is the scenario on the dollar. If the dollar continues to fall, I will try to find areas on the lower time frame. Let's say 5 minutes, and see if we can get long in the markets based on something created here. Now, if you have followed me for a little bit, I don't like this sharp move to one direction, right? And then a sideways market. This can be reversed in no time, right? So I would rather just have, if I am, let's say, long on the equity markets, I would like the dollar to drop in this fashion, okay, and not in this so sharp move to the downside, right? This is lack of liquidity, and when we see lack of liquidity, it's lack of liquidity. It can be reversed in no time to the upside as well, okay? Remember, prices move sharp because there are no orders here, okay? The orders are in the extremes, or very little orders, I might say. All right, so this is the scenario on the dollar. I will keep reviewing this on the lower time frame the rest of the day. On the euro, I just like to follow the euro just because it accounts for 55% of the dollar index right here. So the euro has some supplies up above around, this is the daily, by the way, is around 1.075. Okay, so if the euro comes here, I will be paying attention for a reversal on the dollar. Okay, now the dollar has demand right there, the euro has supply right here. It's a perfect match for a reversal. Okay, now am I accounting for a reversal right now? I said no, because this area has been tested. Okay, so I want to see some movement here. I want to see some formations being created. All right, so let's take a look at the VIX. Sharply moved down on Friday with a 2% move on the equity markets. So the VIX dropped 6%. Now we're back. We're gapping up. We have been in this demand for since last year on March. Look at this. So we rejected prices from here, came back August, rejected. We came back on December. We made the attempt to reject. We didn't. And then we found supply here. Now we're back here. Okay, we're still here. We haven't broken to the downside, and the downside for me is 18. And if we break to the downside, we will find demand right here, like around 16. Okay, but for now, the VIX is a chart that give me zero information as of now, just because we are in demand, but we haven't been able to get out of the demand. Okay. What this tells me, what this chart tells me, is that investors are not panicking at all. Okay. US 10-year yield, treasury market came down sharply on Friday, sorry. And then we are basically flat. So we're going up a little bit, but we're hovering around the 3.58%. Same case as the dollar. So since October, so the dollar peaked in September. This one peaked in October, but is giving up a lot from 4.3% to like 3.58% today. Okay, but market is digesting this 3.5% 10-year yield. We do have some structure. I mean, we haven't broken any like bullish structure yet. We broke this one, but I think the most important one is this one, 2.5, right? And then we have this pivot here that worked out. So I'm very neutral on this chart. I would say that we could spend a lot of time hovering around this area, 3.5, 3.9. 3.4, 3.5, 3.9, like hovering around this area for the rest of the year, unless we have some catalyst and rates move down sharply or just move down. Okay, I have the next demand is 3.2, right? Remember, this is an opposite chart of the bond. So whatever the bond is showing up, this one is a supply on the bond, right? Demand on the yield, and this is a demand on the bond, supply on the yield. Okay, I don't have anything high quality here for now today. Like if we go to the 30-minute and we want to check here, we don't have any like formation that I really like here. Like everything is overnight. And then during, this is curious. Like the trading session is almost to sell this year. Like they're buying the bond during the trading session. Like I don't like this area as a demand. Let's see if we can find something here. There we go. So here, okay, there we go. So let's see if we haven't broken this area, but guaranteed is tested, right? So I want to see. Yeah, we broke down here. So yeah, let me get rid of this. I discarded just because we blew below. Yeah, and we gotta check to the left, and to the left I don't have any structure that I really like. The sharp move up, probably CPI or some sort of news on this. Yeah. Oh, there we go. So here's something. There we go. Here's another demand that we could consider. But look at this. It's 2.29, right? It's far. It's still far from where we are right now. Yeah. Thank you. I was traveling and I took a lot of time off. Well-deserved vacations. But we're back. All right, so here's my standpoint on the 10-year. Look how far is my high quality demand. It's 3.3, right? And we are 3.58. So my what I can tell about this is, all right, so I will account this. I don't want to take this as a demand. And I will assume that prices probably will go down. If we create something here and we reject to the upside, then we can find some demands here. But we do have some supply right here, like high quality. Like look how close is the supply. Here's a supply on the 10-year. Okay, so we are having supplies instead of demands. That tells me that most likely scenario probably, and I would say that is a downside on rates. Okay. Well, for today, I do have this pivot. Okay, and if we break to the upside here, probably this will mean upside. But we need to break, retest, and then hold this. Oh, break here, and then there we go. So this is the bearish scenario on the equity markets. Not very likely. That's why I say we could have a sideways day today. We could have a sideways. We don't have catalyst, right? What time is this? This is the last point. If we don't bounce from here, I don't have anything else below here. Okay, so for me, the bullish case will be something like this. Okay, but this is gonna take some time to develop. All right, so I haven't checked on the equity markets very deeply, just because I trade such a short term. But I do have this pivot. Okay, and if we break to the upside here, probably this will mean upside. But we need to break, retest, and then hold this. So this is the bearish scenario on the equity markets. Not very likely. That's why I say we could have a sideways day today. We could have a sideways. We don't have catalyst, right? So for me, the bullish case will be something like this. Okay, but this is gonna take some time to develop. that I don't have anything like in this sideways market. If you go like this demand, we had it for a little bit. Okay, this demand is very old from us. We had it like since June of 2020, and this demand worked here on October, right? And since then we've been chopping, not chopping, but we've been moving, but we're in a range, 2,000 point range on the Nasdaq. If we go to the 30 minute, we don't have any supply here. Yeah, probably here. There we go. Here it is. But this is not close. I mean, this is far. This is 500 points. Oh, where are we right now? Yeah, it's 300 points above. So I would say here we have something, but is has been tested, right? So there we go. So I would say this is an overnight. So this is good for us. So this is very good for us, because if we do have a bullish scenario on the equity markets, we end up breaking to the upside. We know that if this area holds, right, we have a good trade to the bull side. Okay, and that gives us like 200 points of movement. Now market is creating new overnight high right now, so the market wants to push to the upside. This is Friday, so I wouldn't be surprised if we come back to this level just to retest right here. Okay, we do have all these pivots right here also, and some demands here created. I'm not a huge fan of the demands created like midday. This is like noon and then 1 p.m. this rally-based rally. But and this is a good but we do have this 1 2 coinciding with this demand. Okay, so what I would need if I want to take this one, it's just a sharp move to the downside, right? Not a slow move, but a sharp move to this demand that can be reversed to the upside, and we can see it on the 500 share bar, just to be more precise, right? This is like 1120 to 10970. Okay, so this is the Nasdaq. See, we have like 5 more minutes till the market open, so let's go to the ES. So the ES has a like a better bullish scenario than the NQ. The NQ is weaker. So we're breaking to the upside. Like if the ES is going 0.6% to the upside, and NQ is 0.73% to the upside. All right, let's do the same exercise on the ES. Let's go to the 30 minute, and we do have some demand on Friday, right? We have 1 2, we have this we have a lot of pivots here, like rejection. Like this is going to be important if we come back here, right? This is a big area, and we can narrow it on the 1500 share bar later on the ES. but here it is. Is 3904 to 3885, right? It's like 20 points on the ES, but I'm sure we can narrow this to this exact same area, right? So this one is likely to be in play today. Is 30 points up, 30 points away. It's not very far. So we have 1, 2, 3, 4 rejections at this level, and we have this rejection at this level right here. But this is overnight. I don't know if I like this very much. So this one on the NQ is way above. And this is coinciding with the overnight low though, right here. So I would say closing the gap right here. This level, I will be paying attention to this level for the retest. Is the 39.17, 39.20 approximately on the ES. All right, so we are like 1 minute away from the open. So I'm gonna put this 500, okay? So I'm not trading my personal account today. I defunded it before I went out, and I funded it yesterday, but the money is not there yet. Probably it's gonna be ready tomorrow. And then I'm gonna trade anyway. I'm gonna trade my funded accounts either way. More than one account though. It's gonna be trading the NQ, and my risk is going to be $500 per trade. So my calculator is already set. Okay, my bias is going to be 100% neutral. Okay, just because the dollar is hitting some demand, and the 10-year yield is holding that pivot. Okay, I'm not 100% bullish. Okay. If 10-year yield breaks to the downside, then I will be more bullish on the ES. So I'm gonna have to jump back and forth on this chart because okay, so we're off. We're off and we're breaking to the upside. Let's go here, the internals. All right, NQ internals are on the upper side of the zero line. Obviously, we're going up 0.7% or something. Good morning, MB, welcome. It feels good to be back. Back to the routine, exercise, working, etc. Like you get tired of eating and drinking, right? Like it's too much. So my mantra for this year, I'm not a big guy. I'm not a guy for like New Year's resolution. Thank you, MB. So instead of that, I just wrote some of my goals for this year. But my center for the year, at least for the few months beginning the year, is tell to myself, all right, so you're not in control of the outcome. You're just control of your actions. Okay, that's what we're gonna do with this. That's what we're gonna do here in this channel. We're gonna control our actions so we can let the probabilities of this business work for us. All right, so we do have a very bullish opening. A retest of this high on the overnight high can be an area. So I want to see if I have something here created. I have this is overnight, so the opening is right here. I do have this. Let's see if this one can work for us. Now this one, just because we have this pivot right here, I will only take it coming out of the area, okay? And I would rather the tick charges hitting the zero line. So how much is this risk? 2 contracts. It's a lot of volatility. Prices jumping back and forth. And I have to be careful because of the how do you call these, the trailing stop. Okay, so I cannot take these trades lightly, because if I'm making money and then it goes back, it eats a little bit of my trailing stop. All right, so I'm gonna take this. I'm gonna take this one to the upside.
Order submitted.
Oh shit. All right, so the tick chart is on the zero line. So we broke to the downside. We canceled this order. Where we're at. This is all overnight. This is all overnight. So I ended up not taking this trade just because when the zero line came on the tick chart, we were here. So I activated the order, never filled me in. Now we're hovering around the zero line. If we create something here, then I will take it. Now remember, I'm accounting for a sideways day, and we are in the upper part of the range of today's trading range. Like this is the overnight, right? A sideways day probably for me is long here, short here, right? But there's nothing on the short side yet. We have the entire day to make one trade. There's no rush, especially now that the volatility is a little higher than normal. The first 15 minutes is to the upper side of the. This is a 7-minute chart. I'm gonna be jumping back and forth from this chart. Like I don't do that usually because I do have another screen, but today my screen is I don't know, it's flickering. I don't know what's going on, so I just turn it off, and then I'm gonna be using this one. Now I need to understand that waiting is a big part of my job. Like if I'm staying put, that's working. That's doing something, right? Staying put in trading is doing something. So understand that I don't know what your trading system is, but in mine, patience pays me. Like if I wait, I'll be able to take a better, high quality trade. So that helps me to be, more contained and not taking like stupid trades that will increase my risk. Now I haven't put any trade this year. So today is my first trading day of the year. Thank you, old gringo. Welcome you back. Welcome back to the channel. Let's make this 2023 a good year. So I'm not thinking in short yet, just because the picture hasn't broken to the downside like consistently. And it will sometime today, but not yet. So YM is like the weakest today, and Q is the strongest one. Yeah, and Q is going up. He has just recovered, but NQ is just pushing higher. So I do have a problem with shallow retracements, and that's one thing that I need to learn how to handle, right? Uh, I do have this rally-based rally as a good area to long, but since it's too shallow, I do feel it that this is not enough, right? That's not good. That's not good for me. I mean, for my trading system. But it is working right now. But it's hard for me to take this type of trades, especially if I'm expecting a sideways day. It's not sideways at all, though. It's moving higher. And I don't have anything to the left that is a high quality supply. Like the high quality supply is up above. It's not here. Where is it? Oh no, we did it on the trading view chart. There we go. All this is overnight. All this is overnight. Overnight. Oh, there we go. Finally. So we have 400 where we're at 287. So we have like 130 points more to go. I'll put it here. Yeah. Yeah, there's no way for me to get in right now, unless it retraces back. So I need to learn how to catch this move in this, like for instance here I did have this area, right? It came here, Baylor tested it, and then it went up probably like 100 points. Yeah, 50 points. I need to learn how to catch this at least this one. Like for instance this one was a very very good demand created. Although I did have the area here, I did not put the order. The only order I put was here, up here, like this 220. Okay, I would have been stopped out. It's because my risk was narrower here than the move. So this retracement was how much? 30 points, yeah. So since 1950, when January is good, January dictates the overall direction for the rest of the year. And we do have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1112 exemption, right? 12 exemptions only out of 73 years. 73, 12 divided by 73 is yeah, minus is 83%. 83% of the time January tells you what's the direction for the rest of the year. I think that's very good. All right, so we're approaching the 10 a.m. candle. All right, let's see if this one gives us some sort of retracement so we can get in. And if we missed it, we cannot dwell on the missed trade. We just need to recognize we made a mistake and there you go, take action. YM is 0.4% up, and Q is 1.8% up. So obviously, NQ is acting more bullish today. The ES is almost 1% up. I want to go check on the dollar. Let's go take a look at the dollar. All right, so here's the reason why NQ is so bullish. So 10-year yield is down sharp. 10-year yield is down. Well, it's basically flat. The dollar is holding a little bit. I'm impressed. So I do have these 285. I'm gonna try the 285 if we have some sort of retracement. Doesn't look like we're gonna have one. Have you guys taken any trade? I haven't. Just comment there if you have taken a trade and how was it. I haven't taken any. I missed the opportunity to the long side. No trade, old gringo. Yeah. Look, it's my first trading day of the year, so I want to choose good where I'm gonna trade. Now that the NQ is turning a little bit weaker than the rest of them. Let's go check on the yields. Yeah, they're holding right there. Yep. So we haven't broken to the downside on the yields either. $30 seconds for the 15-minute candle to close. Let's go check on the internals. They're breaking down a little bit. Hmm. Still here. Haven't taken any trade yet. We're going sideways since 9:50. We've been sideways for like 30 minutes. I do have some areas that I want to see if I can take long. So we're starting to have a little bit of divergence on the tick chart. So I am in this. See if we can manage to get the 2 to 1 here. A lot of volatility, a lot of volatility. So I think I am 1 to 1 right here, right? And 1 to 1, yeah, but I'm gonna have to put this thing a break even. Doesn't look beautiful. So yeah, I am a break even. I was like 8 points up. Looks like I can be stepped up break even. That's fine. I could retake this trade though. Yeah, I'm out. So my question is, was I break even? Yeah, I was yeah, I was 1 to 1 here. Look at that. It's going to my target after being stepped up break even. So well, I haven't gotten there yet. I haven't gotten there yet. So I'm not gonna say anything, but yeah, most likely it's gonna get there. Yeah, I'm not shorting. Like I just took a long stopped that break even. Now it's sort of working, but it looks like it's going to work. We'll see. If I don't take this one, right, this is the 1 2, this is the third. I could retake this one though. I could retake this one to the long side. The tick chart is divergent to the upside, meaning that it's creating divergence with the bull signal. Yeah, I do like this. I do like this sharp move down against my area. That's a perfect setup. That's why I took this one. So I took the long here. Took the long and break even here. I mean, with this amount of volatility, I think we will have more opportunities today. Now remember, even though I was a break even, it's like a lost money because my trailing drawdown moved up. And I'll tell you how much it moved up. 13 points. 13.25 times 40. It's $500. So I was $500 up in this, and there we go. It went to my target. But look, I didn't break any rule. It moved 1-to-1, and then I moved my stop. It is what it is. So 1, 2, 3. This is the fourth movement. So this has the highest probability to continue to go up. I am sort of like in scalping mode. It's because I don't it's not scalping per se because I'm not changing any of my rules, but targets are very tight. Just 2-to-1. And I do like this candle a lot. I do like this candle a lot. It's putting a lot of buying pressure. Now remember, don't take my trades. Just take yours. This is my risk. This is my money. You should be making decisions on your money, not me. So please don't take my trades. New 30 minutes. Completely sideways. The previous 30 minute. So it's hard to stop trading for 3 weeks and feel okay. Like I feel a lot of sensations right now. Emotion. I don't know if should call them emotions because I don't feel bad, but it's like it's a little bit of fear, and it's because my confidence is out of shape. I need to regain confidence. I need to regain my confidence. It's just because I'm like out of shape on my trading. Stop, stop for 3 weeks, not following, or like barely following the markets, out of my phone and stuff. What do you mean, old gringo? You're not trading? Hello, how long that you don't trade? Like I haven't traded in 3 weeks. It feels different, but the only thing I need to do is just regain my confidence, and I regain my confidence just trading, taking my A plus setup. Oh, you don't trade every day? Gotcha. Got it. Oh, because you're in Singapore, right? Yeah. No, I feel like my situation is that I haven't traded in 3 weeks, and it's like I feel some sort of insecurity out of my trades. But if I follow my plan, I will get just in shape probably during the week. A couple more days, just doing the same thing, and I'll be back. Yeah, there's no rush. I have the entire day to make one trade. I already put one trade, ended up break even, but after I put it, it ended up working. So it was a good trade. It was this one right here. I think it was this one, right? Yeah, there we go. Long here, break even here, boom. Yeah, take it slow. You're 80. What else do you need? Yeah, stress is not good. But I figure for me, stress in trading comes out of the attachment that I have with the money. So stress is perception. Stress is generated out of our perception. And I look, and I get very stressed out. Like I'm not the one to tell you that, oh, just don't feel it. Yeah, it's hard to do it, but my goal is just to get so detached from the money and opinions on the YouTube or friends or whatever that I don't really care. So if I don't really care, I just can't make the right decisions, right? Without emotions. Not easy to do. It's not an easy thing to do, but um, if you're a trader, that should be your goal. I get so detached from the money and everything else that you can trade the way you're supposed to. Now the S is catching up along with the YM. The YM was very slow though. So market is making new highs and the tick chart is not. So that is showing a little bit of divergence to the short side. And the ADQD is double topping on 1700. So I don't want to take a short here, but probably is due for a retracement. I will not take any short. Although I do have a divergence, a pretty nice divergence on the tick chart. Let's go watch the dollar. Still dropping. Yeah. Yields are holding though. Yields are holding. And VIX is holding as well. Even though we're up 2%, the VIX is flat. Is it's 2% up. $34. Wow, I do have a nice divergence. Very good. It's 30 points. There's a little bit of exhaustion here, so what I'm going to do. It's a little bit of exhaustion there. Yeah. Look. That's why I reduce my risk a little bit. I reduce my risk a little bit here. It's hard. The short is hard. It's not an easy trade. Yeah, especially the tick chart. So the tick chart is showing divergence, right? But that doesn't mean we will have a reversal. We need to have some push. There you go. Let's see if we can take this one. Not an easy trade, guys. Yeah, this thing is gonna break to the upside. Like tick chart is on the extreme, so let's see if we have now. It's hard. Like it's hard. It doesn't want to drop. Like it's very, very minimal risk. $300. Yeah, I wouldn't go below. Like it wouldn't go very far on the retracement just because um we're so bullish. Like I don't want to go below 30. Like below 30 is a lot of demand. Yeah, I want to be aware of what's going on if we get here. Okay. So at this point, I'm gonna move my stop break even because I am right there, right? I already moved 1 to 1. So it's just a 2 to 1. See if we can manage to get there. And look, the red line is a very important line, but I cannot take less than 2 to 1. I think we have the potential to move to 30, but I don't want to have my target at 30. So I am a break even. This is a very risky trade. And I did it with a fairly lower amount of dollar risk just because it's counter trend. Okay, so we got to the target. We got to a target. We made 750 and $720. It's fine. It's just one trade. Thank you, brother. Now you need to be patient. You need to be very, very patient for this to develop. Okay, so I was noticing the what do you call the divergence on the tick chart? But I wouldn't go like forever on this trade. Like is a risky trade. Two. I had 2 contracts here. There we go. But this is not the amount of contracts. Remember, it's the calculator. I was risking no more than 500, and it does the calculation itself. Yeah, this is. I mean, I wouldn't. Yeah, I had 2 contracts, but I'm coming back in 5 minutes, guys. All right, so 4 minutes for the 7 minute. Now the 7 minute on the YM is, it couldn't be more bullish. On the NQ is holding right there, even though the NQ is more bullish today, 2% up, but it tends to be more volatile too. So yeah, how important is to just take a realistic target. Like I needed the target above 30, right? And I did have this pivot. I did have this pivot right here, and I said, all right, so my target was around here, but that was a 2-to-1, okay? Couldn't do anything. But ideally the target must have been above this, right? Why? That's the highest probability, right? All this can be reversed in no time like this. And remember, what it works to the upside works to the downside. Like, see how fast it went down, how fast it went up, how fast it went down. It's different when it goes like this, like very, very slow. Thank you. Thank you. Now this top can work as a support for us. Yeah, let's see what is to the left. What time was this? 4 in the morning. Not very good. There you go. Still, the tick chart is showing a lot of divergence. Still, we're breaking new highs, but not in a solid manner on the tick chart. We have divergence on the tick chart, meaning tick chart is not making new highs while the market is making new highs. And we're 30 points away from the. Pardon me. We're 30 points away from the real supply. Is 11,395. Let's go see what is going on here. Yeah. How this rejection here created such a floor, right? We were talking about that. Not like I don't. It's hard for me to take this, but the reality is that it works. So it was up 20 points. Right? And if you ask me where, I think this is the area that is showing demand. This one. So here's the deal with trading. Okay, if you have, let's say, direction for the day, you have your analysis, right? But since we're using a lot of leverage, it's dangerous. That's why you have to keep very tight stuff. But like, suppose you don't, let's say you don't have any leverage, right? That'll be a lot easier because the only thing you need to do is just wait because eventually it's gonna go up, right? That's the nature of the market. So that's why investing is so good because the only thing you need is time. Unless you're taking, I'm talking about indexing, right? Like SPY, QQQs, etc., right? Unless you're taking individual stocks, that's a whole new world. Like this is different, right? But if you have money and you want to put it to work, I mean, the only thing you need is time, right? Put it into an index that is designed to go up in time. It will not go down because they select companies on purpose just for it to go up, right? So majority, like, the design is made in a way that it will go up, right? That's why the long is always better choice than the short. Now this Friday, new earnings season kicks off. So we're gonna learn a lot on Friday was the health of the economy with the banks reporting, right? The commercial banks are reporting on Friday. We have BofA, JP Morgan, CITI, Wells Fargo, BlackRock. The only one missing there is no. Those four are the biggest one, right? Goldman Sachs, I would say, but that's an investment bank. So we will know about the health of the economy. So I want to know how much was the ES up for the first 3 days. Okay. Oh no, it's not from there. It's from there. It's a 1.3%. 1.3%. So based on the barometer for the January first 5 days, 1.3%. So the market has 2 days. Two datas. 2017 and 2064. So one of the years, 64 went up 13%. 2017 went up 19%. If we put a range between 0.5 and 2.2, how many days do we have? 16, 30. We have like 23 trading years. 23 and 1, 2, 3, 4, 5 out of the 23 negative. 5 out of the 23 negative. So is 5 of 23 is like 80% probability that this year is gonna be positive. Also, the pre-election year, meaning the third year of the presidency, 72 years, just two negative years. So the third year of the presidency, meaning the pre-election year, is the bullish, I don't know how to say it. Like the more bullish scenario politically. I think it's awesome. I think it's awesome for us to know that. And my first analysis for the year, I was thinking like the market will go down based on earnings estimations, but we need to have earnings results, right? So I think the market will go down the first quarter or second quarter, and then the rest of the year is going to go up. But we haven't had any capitulation event, meaning a huge drop. That this is not that we need one to bounce back up, but if earnings estimates are going down, stock market should be going down, and it's not. Like, I wouldn't take any short though. I wouldn't take any short right now. All right, guys, I'm gonna close the live stream, work on something else. So that leave me today 2 trades. So I'm gonna show them here. Here was my first trade, long here. It's is weird. Like you can tell easy, but it's not. Like long, break even, and boom. So this is my first trade, right? This is my first trade. My second trade was a short target, right? I didn't have any high quality demand around this area. I just put my target here intentionally so I didn't have to go. I mean, I was not expecting this demand because of this pivot and then all this crap created here. Okay. So I closed out my trade here and then continuation to the upside. Now this is another area that I had. Not easy for me to take this based on, you know, the support created by this structure. Anyway, it's not my trade. So I didn't take it. So 1 winning trade, 1 break even. That's my summary for the day. And see you guys tomorrow. Thank you for being here. And if you like what I do, please like the video and share with other people so we can grow the channel. All right. See you guys tomorrow. Thank you all, Gringo. Thank you all for being here. Okay.